Oh boy, oh boy, oh boy. Welcome everyone. Jim Cramer says charts are screaming. It's not too late to buy home builder stocks. Well, whenever Jim Cramer obviously says anything, it's time to do 180 and look for the proof of the opposite, right? Because, we know how it is. You don't necessarily want to do the opposite of everything Cramer says, but you should at least look into it because there might be something interesting to find. So when I saw this headline, I went to do a little bit of a digging and actually take a look what, could there be an interesting opportunity for a short? And to give you the bottom line first, in case you don't have maybe, like 10 minutes or for how long I'm going to be rambling here, there is quite a bubble in a home builder stocks. In my opinion, I think it could be a nice opportunity to short. Obviously, that's a little bit trickier to actually do, right? So, always be very careful there in the market. But if you have a couple extra minutes to spare, let me show you why I think it could be a nice opportunity to either short home builders or if you are in them with a long position, then at least take a second look, right? So let's get into it. So first, let's look at some of the home builders, maybe the biggest one in the US, right? The DR Horton, where are they? Oh, pretty much close to all-time highs. Seems like, everything's relatively solid. The P ratio 5.7, that, if you just look at the most basic metrics, that seems like quite undervalued, right? So, might be a decent long position. Well, not so fast, right? And actually, I have to give shout out to one of the guys here named Nick Gerli on Twitter. Feel free to follow him. Definitely some interesting insight into the real estate market. But there is such an interesting chart about the KB homes this time, right? So, obviously there is a bunch of, 7, 8 big home builders in that couple billions range, big companies, publicly traded. And KB Homes, a large home builder, just reported 68% cancel rate. 68%. Oh my God, that's freaking insane. Compared to kind of the average over the past couple of years would be somewhere maybe around 20%. Meaning that 68% cancellation rate, right? Meaning, homes went under contract in the quarter and the buyers just, hey, walked away, maybe pay some cancellation fee, but hey, we don't want it. Doesn't fit our schedule. So, what to do now, right? What to do with that inventory? Well, super scary stuff. And to pile on top of that, right? We have KKR, caps withdrawals on real estate trust in latest pullback, right? So you're having these huge institutional buyers. We've seen a little bit something similar with Blackstone recently. They have these big funds where, you ask some of the wealthy individuals, high net worth individuals to invest in those. And they are just buying the inventory of the real estate. And all of these, trusts similar to this one, Real Estate Select Trust, it's not like you are, on a stock market, the price fluctuates every day. No, these are kind of a semi-opaque, right? The net asset value of all of the inventory is readjusted maybe quarterly with some, private person or company to kind of doing the valuation, meaning it's always, a little bit shady. And, normally these trusts have some quarterly limits for withdrawal, right? Because, okay, now you are not at the public market, you are kind of the semi-private with high net worth individuals who, you kind of want to lock the money there for some time, do some bigger deals. So obviously the private market is moving somewhat differently than the stock market, where it's, just super fast paced and, you can trade the stock in and out and you can liquidate all the positions, on a whim. But with the private market, there's always a little bit of a lag, right? Meaning that also, sometimes these private companies want to play a little bit of a games with all of this, right? So even though the public market would already, showed you that, oh my God, everything's already declined 20-30%, the private company might say like, oh, we did an evaluation and it didn't really, do anything. Our guys say that it's still worth what it's worth. But hey, obviously these high net worth individuals apparently don't trust this kind of an approach, and they just want out. Okay, you're telling me that it still costs this. Oh, perfect. I'll take my money out. And so apparently they hit the limit, and now this, they are playing this game. We're not going to let you get more than this amount, but hey, we want out. So that's definitely a tricky scenario, right? But back to the home builders, because what happened over the past maybe like a year or so, or well, since the first wave of the pandemic, right, in 2020, everything, on this chart you can see the mortgage rates in the red, right, that were steadily, kind of going down since 2019, and you have the home sales with the blue, right? So obviously when the first pandemic hit, first there was a panic, everything was kind of crashing and whatever, but the mortgage rates, were just like totally towards the ground. That's this whole period, 2020, 21, 22, kind of the rates oscillating between 2.7, 3.1, great rates. It's just like, so incentivizing anyone to get the new homes. Also with the pandemic and everything, right? There wasn't that much to do. You were locked at home. So maybe you were like, hey, maybe I need a bigger home, right? So, you closed the new sale for the home. So all of the new sale were pretty elevated for most of 2021, and then only in 22 it's starting to drop quite significantly, right, with the rising rate. So as the rates are rising, the sales are plummeting. But what's the effect on home builders, right? Because let's look at some of the, for example, KB Homes here. Fourth quarter 2022 highlights. Revenue increased 16%. Amazing, right? Operating income grew 30%. Amazing, right? Well, yeah, for now, right? But, building a home, that's a process, right? That takes a year or two. Meaning these companies are moving so slowly in terms of, their whole market cycle. And investors, if you look at the first glance, you just see, okay, revenue's perfect, operating income as well. You look at the, maybe some of the stuff like the P ratio, right? As we looked a little bit before, for DR, Horton, 5.8, for KB Homes, 4.1. So it looks like it's such a great value for this company, but well, it's freaking not, because all of these earnings lag by about 12 to 18 months. So this is basically, big value trap, because if you look at the KB Homes, net orders are down 80%. 80%. Oh my God, that's so crazy. Backlog value decreased 25%, right? So that's also plummeting, and it will most likely continue to plummet even further. And that will show in a couple of quarters, right? That suddenly, you have 80% less orders. That means you will have only, maybe 1/6 of the revenue, 1/6 of, meaning that P ratio that might now be 5. Okay, when the revenue actually increased so much, you might not even be profitable, or it will just be significantly higher P ratio, right? Because suddenly your profits are significantly less with much less revenue, much less profits. Everything's kind of down the drain. So there are basically two scenarios, right? Either we are in a massive bubble and all of these home builders need to come down by at least 50%, I would say, at least. Or maybe, just maybe, but I would put relatively low probability on that. There is a possibility that investors are kind of betting on the Fed pivot in the second half of the year and the rates going down again, spurring more demand for the home sales, But I would say that's even if that happens, right? Uh, the home sales are most likely still going to be relatively down compared to this, crazy elevated demand of 2020, 2021. So, in my opinion, this looks very, very, very scary. And, you can look at the backlog value, right, for the KB homes. And this is a little bit weird chart because they always have like the first quarter of 2021, 22. So it basically goes, a little bit weird, right? But you can see that from like 20 to 21 to 22, basically the backlog was rising. But then only in 22, it basically peaked at the second quarter of 22, the backlog value, right? And now it's going down. And now it's going down again. And where it's going to be next quarter, right? Because I mean, this is super quick. Like the backlog just evaporated from 6 billion to 3.6, so almost 50% cut in the backlog in half a year. So where it's going to be in another half a year? Like even if it stays the same, it just means that again almost half of the revenue profits evaporated. So and I don't think that KB Home takes to the metaverse for new home viewings. I don't think that's gonna help the profits, right? So they should really focus on what they are actually doing, like the real world. So like in my opinion, this is super scary. You can also look at some of the other home builders like Lennar, right? New orders decreased by 15%, so not as dramatic, but backlog decreased 21%. So and that's fourth quarter highlights. So again, right, it's definitely going down. The question is by how much. So, like as always, what Cramer says, you just have to do the opposite, and like this is just the prime example. So obviously there was a lot of rambling from me. I hope this little bit give you another perspective. If you liked my rambling, subscribe, like, all of this YouTube BS, but I'm here to just show you that another angle and a little bit try to uncover some of the intricacies of the market, because what in my opinion basically perspired is that lots of those home builders are solidly run companies, especially if you look at some of the higher end Toll Brothers, but it's the investors who are delusional, right? And for some reason pushing the stock price so high, or keeping it elevated, even though the earnings are most likely going to decline significantly over the next couple of quarters, right? So it's just a ticking time bomb. I don't know if those investors are just like kind of playing the game of musical chairs and just waiting for that moment to exit those long positions, but that's definitely a scary place to be, right? So you rather, when you are playing this game of musical chairs, you want to be rather the first one to exit the game, right? So that's just my opinion. I would almost, again, for me, this looks like a nice example for a short position. Not something I'm most likely going to do, because of course with shorting there comes other challenges, but this is just super scary. So thank you for staying with me. Take care.